India's inflation just broke the RBI's target. Here's why. Good day, everyone. Welcome to the video of the day. For the first time in over a year, India's inflation just crossed the Reserve Bank of India's own target line. June inflation came in at 4.38%, higher than every economist forecast, and the eighth straight month it's climbed. So, what actually broke the streak and what happens next? Let's look at the real numbers. The RBI targets inflation at 4% with room to move 2 percentage points in either direction. For over a year, India stayed comfortably under that 4% line. But in June, that streak ended. And the reasons why connect dark it to stories we have covered before on this channel, which is the number itself is the first discussion. India's retail inflation, measured by the Consumer Price Index, rose to 4.38% in June, up from 3% in May. That's not just a small tick up. It's about the forecast of 4.3%. It's the first time inflation has crossed RBS line. The divide between rural and urban India is also worth noting. Rural inflation hit at 4.7%, while urban areas saw a lower of 3.92%, and the household are feeling significantly more pressure than city dwellers right now. But the part where it climbed was the food, a story of extremes. The inflation track separately accelerated to 5.32% in June from 4.7% in May. Ginger price jumped 50% year on year. Tomatoes surged nearly 32%. Meanwhile, potatoes actually saw price fall over 20% and peas drop almost 10%. Weekend delayed monsoon rainfall is a big part of the story here, creating exactly this kind of uneven pressure across different crops depending on regional rainfall patterns. One more connection is there, which is conflict of war, is the fuel connection. Here's why this connects directly to the story we covered before. Transport inflation surged to 4.3%, sharply from 1.75%. And the jump is the delayed pass through the fuel price hikes we talked about earlier. The ones triggered by the Middle East conflict, disrupting oil shipping and pushing crude price higher. It took few months, but that energy shock is now visibly showing up in Indian economy by the consumers, and in turn, the price of anything that needs to be shipped. Also, the gold really surprising side effect. There's one more piece that connects to earlier video. That's gold. Remember gold's wild 26, the surge to all-time high, then the crash. The volatility left it mark here too. Even silver jewelry price jumped 133% staggering year on year in June. Even gold, diamond, they are combined came inflation rate. When bullion price swing that hard, it shows directly in India's inflation basket since jewelry is such a significant part of India's household spending. What happened next and what is the RBI's dilemma? RBI just held its policy rate steady in this June meeting, but it had already raised its inflation forecast in anticipation of exactly this kind of pressures. Even the predictors are saying the central bank will hold the inflation forecast to 5.1 to 5.2% for FY27. That matters for anyone with a loan or planning to take one, because if inflation keeps running hot, higher interest rates typically follow. But you need to look at the bigger picture, and the bigger picture is that the full chain, a delayed fuel price through the year's Middle East conflict, an uneven monsoon hitting specific crop hearts, and volatile gold and silver market, three separate stories we have covered individually, all converging in one month to push India's inflation the past of RBI's own comfort zone for the first time in last 18 months. To conclude, it could be said the next inflation reading covering July comes out on August 12, and it will tell us whether it was a 1 month spike or the start of a longer trend. We will be watching it. Make sure to like this video, share it with your friends, family, colleagues too. Hit the button of subscribe. Welcome to Money Brief. Let's grow together.